Welcome back to the channel, everyone. Today I want to show you this video of Ken Griffin talking about how he avoided a margin call, how he was completely oblivious to the state of the financial system in 2008, and how he rather cockily avoided that margin call. So stay tuned and let's make some money. But before I dive into the video, I just want to give a massive shout out to the 3,500 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already, so that you don't miss another video just like this one. And guys, if you didn't already know, I'm currently running a massive $600 PayPal or Visa gift card giveaway, and I'm drawing the winner on the 28th of August. All you have to do to be in with a chance of winning $600 is join the Patreon and the private Discord, linked in the description below. And now guys, I want to dive straight in with the key information. So, let's hear what Ken Griffin had to say.
And not foreseeing the financial crisis of 2008 was the greatest mistake of my career. You see, we are paid to see the unforeseen. And I did not grasp the magnitude and depth of the financial crisis that was growing in our banking system. A crisis so large that virtually every bank in America would have failed if the government had not intervened. Every bank would have failed. And after Lehman failed, we found ourselves fighting for our very survival. We were caught in the maelstrom. We were losing hundreds of millions of dollars a week, if not more. CNBC parked a van in front of Citadel, waiting to break the story of our demise. But we weren't going to give them that story. You see, each day, we took the steps needed to keep our business going. We sold assets. We closed business lines. We let people go. We suspended redemptions. Our management team absorbed $500 million of costs on behalf of our investors to demonstrate our commitment to the business and our belief in the future. And each thing we did bought us one more day. And day by day, we bought ourselves a future. Often the choice was between painful and more painful. But the one thing we didn't do was put things off. By the end of 2008, we had lost half our capital. But we were still in business. And we kept our team. And our team kept fighting to buy us another day. You see, with the right people, with the ability to execute, and with the willingness to make the tough decisions, we were able to save our firm.
As you can see, Ken Griffin is very oblivious to things that go on around him. I personally think this is how he ended up in the mess of AMC and GameStop. I think Ken Griffin started by shorting AMC and GameStop because he thought in the pandemic that there'd be two businesses that went bankrupt. However, both of these businesses reopened and began generating significant revenues again. I think Ken Griffin was just very oblivious to this, and that's why he didn't close his short position. On top of this, in January of 2021, you had hundreds of thousands of retail investors like you and I jump on the bandwagon and buy the stock of GameStop and AMC to show our dedication to the brands and that they were going to continue on to be successful companies. And this again is where I think that Ken Griffin was oblivious. Instead of realizing that these companies were reopening and closing his short position, or realizing that everyone was buying the stock again and closing his short position, he decided to double down and triple down and quadruple down on his short position. Instead of then realizing he'd made a mistake and closing his short position, he decided to take the illegal route and started creating tons and tons and tons of synthetic shorts, again doubling, tripling and quadrupling down on his position. And he's now been so oblivious that it's got to the point where closing his short position would bankrupt Citadel, and therefore he's had no choice but to continue on committing this malpractice. And I think what you have to realise is that this is a game that Ken Griffin cannot win. He can continue shorting AMC and knocking the price down, again continuing to double down, triple down and quadruple down on his already well overinflated position. But even if he continues to knock down the price of AMC and GameStop, us apes aren't going to leave and we're not going to sell our shares. Therefore, he won't ever be able to cover his short position down at the $20 region or the $10 region or the $5 region. The reason why he can't cover his short position down here is because he's been making his short position even bigger, and therefore he would have to buy up all of the supply of the stock, thereby sending the price skyrocketing to new highs. There's no magical fairy that's going to come by and force us to give over our shares to Ken Griffin, because that's not how it works. Ultimately, at some point, the SEC will come down and force Ken Griffin to buy our shares from us at the price we set. And ultimately, this is what will cause a margin call to Ken Griffin and Citadel. You have to remember that to close his position, he has to buy back every single synthetic share that he's created from the likes of you and I. And again, he can't just hold this short position forever, because there will come a time where he won't meet the margin requirements and will get margin called. But I expect what will happen before then is the SEC will come down on him and forcibly liquidate his position and forcing him to buy back all of those synthetic shares. I also wanted to go through this Reuters article that starts by saying a UK-based hedge fund, O'Day Asset Management, has sold its stakes in airline firms Ryanair Holding and International Consolidated Airlines Group, the Mail on Sunday reported. Hedge fund manager James Hanbury sold his holdings in British Airways owner IAG, Mail on Sunday reported, citing a presentation seen by the newspaper. This recent development comes after the hedge fund took a short position for cinema chain AMC Entertainment, according to a report in the Financial Times. Clearly, this is a hedge fund that started its short position in AMC around the $5 to $10 area. AMC then ran up to $70 and has now since been pulling back. But O'Day Asset Management has been consistently adding to their short position in order to crush the AMC price. By adding to their short position consistently, they're having to sell off all of their long positions so they have enough capital to continue feeding this short position. Again, a very similar story to Citadel. I saw another article on Reddit where Citadel had actually been selling off a large portion of its long holdings in Facebook, Amazon and some other companies to continue feeding that AMC and GameStop short. As I said, I do think it's only a matter of time before the SEC come down on them, because there's no other way that they can escape. Because they've been doubling, tripling and quadrupling down on their short positions, there's no way that they can close their short positions that are now in the multiple billions of dollars, if not potentially even in the trillions of dollars. They can't close that short position without skyrocketing the price. And finally, I wanted to give you a quick guide to fighting off high-level FUD attacks. The NLP and Eriksonian Hypnosis-based attacks use highly damaging psychological programming using words and language to try and reprogram people's minds. Neuro-linguistic programming, or NLP, is the power of words to reprogram the mind like a computer is programmed. And Eriksonian hypnosis is the power of suggestion to try and weaken apes' diamond minds and turn their diamond hands into paper hands. NLP is using words to program people's brains, leading people into the emotional state you want them to feel so that they can then use their emotions to get them to do what you want them to do, or paper hand, as opposed to what's best for them to do, which is diamond hand. For example, don't think of a big elephant. Your brain has no choice but to think of that big elephant. Therefore, I'm suggesting you to think of a big elephant while being able to claim to do the exact opposite. If someone wants to weaken you, they'll ask you to imagine weak or stressful situations. They'll ask you to play it in your mind again and again to try and weaken your mental fortitude. Notice that this person in their post is painting only negative scenarios, asking apes to visualize stressful situations, suggesting that people will paper hand, putting the idea out there that all apes will fold like a cheap blanket by pretending that he is trying to help you. He is actually trying to enter your mind and paint in your mind a scenario of you becoming weak during the squeeze. However, the super reality is that the minute the AMC shares go to $200 a share, $300, $1,000 a share, apes will recognise that the due diligence is right, and apes will become even stronger. Apes will go from heroic to Hercules level of mental strength. All the DD is proven the minute we hit $100 and then $200 and then $300. Eriksonian hypnosis is using the power of suggestions to do super fast hypnosis and totally reprogram people into a positive, empowering state of mind. However, evil people can also use it to try and put people into a negative, disempowering state of mind as well. So why would hedge funds be using neuro-linguistic programming and Eriksonian hypnosis? These are very powerful, and yet they are new and not medically accepted. The answer is simple. Traditional psychological attacks are no longer working. All their expensive psychiatrists and psychologists are not being able to weaken the apes. All their price manipulation and FUD articles in financial news sites are not able to get the apes to sell. And therefore, hedge funds are resorting to powerful and not yet medically accepted psychological methods such as neuro-linguistic programming and Eriksonian hypnosis. But we're on the verge of the apes' greatest moment. We will become stronger and stronger. Our diamond hands and diamond minds and diamond balls will shine even brighter. All our lives we've waited for this moment, to finally get a fair chance in life. Men and women are both born to succeed. We are getting our moment, and when it arrives, we will shine like the crazy diamonds that we are. So guys, when you do see articles that are either trying to trick you or trying to convince you that the squeeze won't happen, just remember that it's FUD and that it's NLP and that it's super sneaky techniques to try and make you think that the squeeze isn't going to happen. But you just need to remember that the due diligence has been done and the shorts have no escape but to cover their short positions. Guys, be sure to let me know down in the comments below what you thought about that video of Ken Griffin talking about almost being margin called. And if you want to pick up some shares in AMC, but you haven't even yet signed up to a trading platform, be sure to sign up with Fidelity, because they don't sell your order flow to market makers like Citadel, who route them through the dark pool. But if you want to buy some other shares in companies like Apple, Amazon, Tesla or Netflix, then Webull is an excellent beginner investment program. They've got great charting, they've got news, they've got company fundamentals and figures, they've got option order flow, they've got absolutely everything. So be sure to sign up with Webull using the link in the description below to get some free shares. And if you're from the UK, then be sure to sign up to Free Trade, again linked in the description below, to get some free shares, as they also don't sell their order flow. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!